Picture this. You've just graduated, landed your first job, and received your first paycheck. Now what? This is where personal finance steps in. It's more than just a tool for managing money. It's your ticket to financial independence and stability. Imagine a young graduate just like you who within a span of 5 short years goes from renting a shoebox apartment to owning a house. Sounds impossible, right? But it's not. It's the power of careful financial planning and strategic investing. Think about it, it's not just about stashing away every penny in a savings account. It's about making your money work for you. It's about investing in the right places at the right times. It's about taking calculated risks and reaping rewards. It's about growing your wealth, not just saving it. Personal finance isn't just about saving, it's about growing your wealth. Investing might sound intimidating, but it doesn't have to be. Let's start with something simple: a savings account. Now you may be wondering, how is a savings account an investment? Well, when you put your money into a savings account, it doesn't just sit there, it grows, albeit slowly thanks to the magic of interest. Let's take Jane, for instance. She's a college student who started her investment journey with a humble savings account. Each month, she tucked away a small portion of her part-time job earnings. Over time, her savings grew not just from her deposits, but also from the accumulated interest. This is the essence of a savings account as a beginner's investment. It's a safe, risk-free way to start growing your wealth. And while the returns may not be as high as other forms of investments, it's a start. It paves the way to understanding how money can work for you. A savings account is your first step into the world of investing. In the world of investing, risk and reward go hand in hand. As intriguing as it sounds, it's the absolute truth. Let's break it down. Risk refers to the chance that an investment's actual return will differ from the expected return. Reward, on the other hand, is the potential gain you can reap from your investment. Imagine two friends, cautious Carl and risky Rachel. Carl prefers to play it safe, investing in bonds, while Rachel is more adventurous, betting on high-growth stocks. Over time, Carl's investments yield steady but modest returns. Rachel, however, experiences a roller coaster ride. Some years she's soaring high, other years she's plummeting. In the end, Rachel might end up with more wealth than Carl, but she also faces the possibility of losing a significant portion of her investment. That's the essence of risk and reward. It's like a dance, sometimes graceful, other times turbulent. Remember, higher risk could mean higher reward, but it could also mean greater loss. Scene script. Have you ever heard of the term compound interest? It's your best friend in investing. Now you might be wondering, what makes compound interest so magical? Well, let's dive into it. You see, compound interest is like a snowball rolling down a hill. As it rolls, it picks up more and more snow, growing exponentially larger. It's not just the original snowball that grows, but the new snow that's been picked up along the way contributes to the growth as well. Compound interest operates in a similar manner. It's the interest you earn on both your original money and on the interest you keep accumulating. So the money you invest doesn't just increase by a flat rate every year, but it grows at an increasing rate, much like our snowball on the hill. Let's illustrate this with a real-life example. Suppose you invest $1,000 at an annual interest rate of 5%. After the first year, you'll have $1,050. Now here's where the magic happens. In the second year, you're not just earning interest on your initial $1,000. No, you're earning interest on the whole $1,050. So at the end of the second year, you'll have $1,102.50. And this process continues year after year. Now imagine this scenario over 20 or 30 years. The difference becomes significant. The more time your money has to grow, the more powerful the effect of compound interest becomes, and the larger your investment snowball becomes. It's the magic of mathematics and time working together in your favor. So, what's the key takeaway here? Start investing as soon as you can and let compound interest do the heavy lifting. Choose investments that offer compound interest and let your money grow over time. With compound interest, your money works for you, even when you're sleeping. Keep this in mind and remember, the magic of compound interest is just one of the many tools you have in your investing toolkit. Ever heard the phrase, "Don't put all your eggs in one basket"? In investing, it's called diversification. It's a simple concept, but a crucial one. Imagine a farmer with a dozen eggs. If he puts them all in one basket and unfortunately drops it, he loses everything. But if he spreads them out into several baskets, the impact of one basket falling isn't as devastating. In the world of investing, your eggs are your investments and baskets are different asset classes like stocks, bonds, real estate. When you diversify, you spread your resources across different investments. You're not just betting on one horse, but several. This way, if one investment doesn't perform well, others might. Take the dot-com bubble of the late 90s. Many investors who put all their money into tech stocks lost everything when the bubble burst. But those who diversified their portfolios saw less damage. Diversification can help you navigate the ups and downs of the market. Now that you've got these tips in your arsenal, it's time to take action. There's no time like the present to begin your investment journey. Remember, every journey starts with a single step. Your initial foray into the world of investing might feel intimidating, but don't let that stop you. Investing is like planting a seed. It might seem insignificant at first, but given time, patience, and the right care, it can grow into a mighty tree. Similarly, your small initial investment can grow exponentially over time thanks to the magic of compound interest. So don't hesitate. Don't let fear or uncertainty hold you back. Embrace the risk, for it's the gateway to reward. And remember, you're not alone in this journey. Millions of people around the world have embarked on this same path, and they've reaped the benefits of their courage and perseverance. The world of investing awaits you. Take the first step today and let your money work for you.